Thank you for joining me. I'm Alex, and I want to talk about Kroger today. So Kroger does retail, they do grocery, so obviously they're going to be one of the few businesses or sectors that is not much affected by the current situation and might actually be positively affected because people don't go to restaurants a lot and people try to cook at home. So definitely a good thing for them. And for that reason, I think that they're going to be largely unaffected, and these financials actually kind of still make sense. Current price $33, which gives them a market cap of $26 billion. Current dividend yield is just under 2% with almost 30% payout ratio, which is not bad. Revenue $122 billion, slightly up. Earnings $1.7 billion, down significantly. And that gives them a PE of 17 with a forward PE of 15. So obviously they think that earnings are going back up, and that is before the current situation happened. So I assume that they're going to beat that significantly. Total assets $45 billion, total liabilities $37 billion, which gives them a total stockholders' equity of $8.6 billion. That's mostly the balance sheet just growing on both sides, and not much really changed there. So overall, because it's such a stable sector, I think that the business as a whole is a very safe business to invest in, especially with a balance sheet with $8.6 billion in equity. Certainly seen a lot worse recently. So the PE is nice, the dividend is okay, and I like the balance sheet. It's not a great balance sheet by any means, but it's a decent balance sheet. So for a growth investor, obviously that 1%-ish growth is not going to be that enticing. For a dividend investor, 2% dividend with 30% payout ratio is pretty nice. Obviously, there's better paying dividend stocks out there, but I don't think there's as safe dividend stocks out there paying around the same rate. There might be some, for sure. I think that Walmart pays around the same dividend, but with a much higher payout ratio. So for a dividend investor, I think it's pretty interesting stock and worth looking into. And for a value investor, I think that the PE is nice enough. The dividend is nice enough. Revenue is growing, even if slightly. And the balance sheet is all right. So I think that for a value investor, it really makes sense to look into the stock right now. I think that they're going to be beating their estimates by quite a bit. So that might just be a short-term bump, and I'm looking for long-term investments, so that doesn't really matter all that much. But still, I think it's a very interesting stock for a value investor. That's it for me for today. I'm coming out with more videos every day before market open, so make sure to subscribe if you like that. I hope you have a successful day.